This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think the fundamental supporting stocks are intact, and I think it's a good opportunity for investors here.
Tom Lee discusses the ongoing AI revolution, focusing on Nvidia's central role in driving growth across various sectors like enterprise, software, and cybersecurity. He notes the multiplier effect of Nvidia's chips and the regulatory shifts that are setting the stage for a golden era in AI. Despite Nvidia's stock stabilizing in the latter half of the year, Lee is optimistic about the company's long-term prospects, especially with upcoming developments like Blackwell. He points out the wide range of forecasts for Nvidia's revenue from Blackwell, signaling potential stock volatility. Lee also suggests option strategies to capitalize on Nvidia's price movements and leverage the current market conditions. Nvidia's growth is expected to continue as AI adoption accelerates. The discussion then shifts to Tesla, where Lee emphasizes the Cybertruck's potential to significantly boost sales, with expectations of a tripling year-over-year. Despite skepticism around Tesla's futuristic robo-valuations, Lee believes products like the Cybertruck are more likely to drive immediate growth. He also touches on option strategies to navigate Tesla's high volatility while maintaining a bullish stance.
Well, the sort of new hotness over the past few days in the market has been Broadcom. In contrast to Nvidia, it was up 24% on Friday following its earnings. It's up again today by double digits. And yes, the reception to Broadcom's numbers was impressive from analysts. However, what's interesting is if you look at the outlook for next year, you look at a Stacy Rasgon from Bernstein, you look at a Vivek Arya from Bank of America, they like both stocks going into 2025, both Nvidia and Broadcom. I had a chat on the phone today with John Vinn over at KeyBank, and he said there seems to be this view now that people had been waiting for the custom silicon wave to come. In other words, the hyperscalers, other companies start to design and have their own custom chips. And Broadcom is seen as a main beneficiary of that, particularly following its report. He happens to think that it's premature, that we're seeing this real shift in the market, but that is a shift people have been waiting for.
Yeah, in terms of just showing the love for Hock Tan's company, per Bloomberg data, all in, 25 analysts have now raised price targets by an average of 19%. No analyst cut price targets on Broadcom. No analyst downgraded. 12-month target is around 232 now.
Yeah, and what's so remarkable about that? That company matched estimates with its earnings. It was all about the commentary around AI, around the total addressable market for these custom chips that we're talking about, and what that is going to lend to Broadcom in the future. But it also gave a big range. It said maybe that AI market could be between $60 to $90 billion by fiscal year 2027. 60 to 90 is a pretty big swing.
You had mentioned Stacy Rasgon, who took his target to 250, and Stacy kind of told his clients, for him, he looked at Broadcom and said, bottom line, the AI story there just seemed to be kind of really coming together for Hock Tan, and a lot of people obviously agree with him.
Arjun, what's going on? Why are we seeing such weakness in Nvidia and Broadcom really gaining so much strength?
Unpack this and start off with a couple of stats. In the latest quarter, Broadcom's revenue was just over $14 billion, up 51% year on year. Nvidia, meanwhile, posted just over $35 billion in revenue, up 94% year on year. Broadcom trades at a higher forward PE than Nvidia, yet Broadcom is getting all of this backing from investors right now. There's a sense, I think, that investors are looking for the next Nvidia, the company that's going to give them the outside returns riding this AI wave. So you're seeing some of that rotation happen there. But it's important to know also that Broadcom and Nvidia are not necessarily an apples to apples comparison. Nvidia develops GPUs, these graphics processing units that have been used to train huge AI models like those made by OpenAI. There is still no real challenger here in this space. Meanwhile, Broadcom's focus really has been on designing custom AI chips for hyperscalers, the big cloud players like Google, Amazon, or Microsoft. And while these hyperscalers still need Nvidia chips, they're increasingly looking towards some of this custom silicon that Broadcom's designing that can be used for certain tasks or processes. These hyperscalers then sell those services through their cloud division. Now, one reason the market is excited is because of recent comments by the Broadcom CEO, Hock Tan, who said 3 hyperscale customers have developed their own own AI chips on Broadcom's own platform that will be deployed over the next 3 years. And the company has received also a round of price target increases from Wall Street. All of that right now helping Broadcom's recent rally to over $1 trillion.
Nvidia, I know we talk about it being at a relatively expensive multiple, roughly 35 times forward, but given that growth rate, that's very much justified. So I'm much more comfortable in this part of the discussion than I was in the crypto discussion.
That's why I didn't ask you about it. Nvidia, by the way, is officially entering correction territory. It's down 10% from its November 7th closing high. Yeah. We'll talk about a related stock that is having a really great moment of its own, but we'll do that a little bit later because we have a move around it. But we knew that at some point these were not going to trade as a monolith. In fact, they've separated themselves from one another. You've had record highs today for Alphabet, record high today for Amazon. You've had recent record highs for Meta and Apple. And then the distance is a little bit for the Nvidias of the world or Microsoft, which hasn't hit a high since the summer.
Yeah, so it's very interesting. What I wrote down in my notes, these are the stocks in the Mag 7 that are at all-time highs, right? Apple, Google, Meta, Amazon, Tesla. And what isn't on that list is Nvidia. So all of the talk we've had over the last few months about the market broadening, the market did broaden in the third quarter. It's not broad in the fourth quarter. We have a little chart if you want to show it. I mean, we've really gotten to a point where 76% of the market gains are back in the Mag 7.
Take us through this. What did you want to show?
Yeah, so what you see is that in the second quarter of this year, we went from the Mag 7 represented 110% of all the gains in the S&P. The other 493 names were down. And then that changed in the third quarter. They were only 9% of the gain, but now they are 76% of the gain this quarter, except Nvidia. So the market, if you talk about broadening, it's just the Mag 7 is broadened away from Nvidia. It's the other names in the Mag 7.
These are, this trade, Jim, is back with a vengeance. That's how we've been describing it. Yeah. And you could, I think, make the argument that it's even better that it is back the way it is without Nvidia carrying everything. Because some doubted the fact that, well, if Nvidia struggles, well, that means that the Mag 7s are going to go down, and then the overall market's going to be in trouble. Not so fast. You've had a continued big jump in tech positioning, according to Deutsche Bank today. You're looking at the stocks month to date for many of these names, and it is stark, obviously, where Nvidia is relative to the rest. But they suggest positioning's very elevated again, factoring in modest reacceleration in earnings growth, bucking the gradual slowing over the last 3 quarters.
Nvidia, the biggest laggard of the group. What does that tell you about a rotation in tech heading into 2025?
So I think that as the chart kind of puts an exclamation point on this, the theme and part of our theme, which has been pretty much the case for all of 24, and we think this persists into 25, is number one, you're likely to continue to see these really aggressive rotations into and out of groups or sectors, whether it's the Mag 7 versus the other 493, whether it's tech and communication services at the expense of the rest of the market. But I think even within groups now, you're starting to see this wider dispersion. I mean, the performance gap that you noted between Tesla and Nvidia, even over the past month, it's amazing that you would look at just the group of the Mag 7 and see that it has spiked, but it's been almost disproportionately driven by one or two names. So I think that is probably a more important theme to keep in mind, especially because the biggest companies are not always the best performers. And year to date, you've seen that where Nvidia, yes, still second best performer in the S&P, but Microsoft is in, I think, 205th place. So you've got a huge gap between two companies that are still called magnificent in terms of the group that they're in. And I don't cover the stocks, it's just looking at performance. But it's just looking at the idea that there are other opportunities out there, and that is sometimes exacerbated by some of these rotations that you tend to get, notably the one that we've seen over the past month.
We're looking at chips today, really focusing in on shares of Nvidia, that hitting a sluggish run, stock falling. It's now down more than 10% from its record close last month. You want to know when its record close was? The day of its record close? It happened to be Election Day. And since Election Day, Nvidia is down. It's in fact now down well more than 10%. It's getting closer to 11-12%. The rest of the Magnificent Seven, all of them have been higher. So if you look at that ETF that tracks the Mag 7, it's up. If you look at each of them, especially Tesla, which has far and away been the winner, they're all up. Nvidia one of these things is not like the other situation.
And we spoke recently to Nancy Tengler, who a very smart investment strategist and Nvidia bull, and I was asking her about this and what sort of she thought explained that, and I bounced one idea off her, which is, could it be in part that there's a product transition occurring at Nvidia? Could that help explain some of the weakness? And Nancy basically just told us that she just thinks the market has a short-term memory. She actually told us she was using this weakness to add to their position over there, because I think her bottom line to us was, Julie, she looks at Gen AI spending and it's still going very strong, and her bet, like a lot of folks, is if that's true, then Jensen Huang is a beneficiary.
Tom Lee discusses the growing impact of AI, with Nvidia playing a central role in driving tech growth across multiple industries. He highlights Nvidia's potential, despite some market volatility, and the uncertainty surrounding its Blackwell launch, which could lead to stock fluctuations. The focus then shifts to Tesla, where Lee sees the Cybertruck as a major growth driver, projecting a significant increase in demand. He also shares insights into option strategies for both Nvidia and Tesla, recommending approaches that capitalize on market volatility. What will be the impact of the Cybertruck on Tesla's sales? How do you think Nvidia will shape the future of AI?